In today's video, guys, I'm going to tell you about the 5 things that you need to really check when you want to enter a trade. I know a lot of people feel like they are exceptional traders. They've been trading for the past 2 years, 3 years. They are advanced traders, right? So they don't need to really be looking at some of these basic things that I'm going to be pointing out. But trust me, some of these things have led to so many people blowing their account, including you. So you might want to watch this video to the very end and then listen carefully to all the major 5 points that I'm going to be listing that you need to really take precautionary notice of before you enter a trade in the market. So this is really going to be a very succinct video, so watch to the very end, right? So number 1 thing that you really want to take precautionary notice of before you enter a trade is your trade criteria, right? So many traders, they don't really have a trade criteria. When I say trade criteria, what do I really mean? It means having that detailed reasons before you want to take a trade, right? So some people, they're like, okay, they trade order block, they trade SMC, they trade ICT, they trade support resistance, they trade demand and supply. It doesn't matter any strategy that you're trading. All that matters is that does the trade setup that you're looking to take falls in that confinement of your trade rules. So with me like this, I have few confluences that I look out for trading, right? I've taught you guys so many of them: my support level, my resistance level, my trend line, my Fibonacci level, my key level, my psychological level. Like all of those things, I look out for them before I take any trade entry. So first things first, I want to really make sure that Kojo, is this trade setup that you're coming to take fall into the category of trade setup that you like taking, right? So I really want to make sure that it falls perfectly in that. Then I'm convinced that okay, I'm making a progress, I'll likely be able to take this trade. Second thing is that you really want to wait for your trade confirmation. Most people give less priority to what we call trade confirmation. Some people do not even know that there's something even called trade confirmation. All they think about is that they want to trade the market. They look at a particular setup, it falls in the zone, boom, they start taking the trade. What happens? The trade literally goes against them and then they are totally losing their money in the market. Why? Because they've not prioritized understanding trade confirmation, right? So trade confirmation could come in the form of perhaps somebody who is using a moving average. You want to make sure that okay, the market has come to a key moving average range you're looking to. You know, moving average acts like a dynamic support or resistance in the market, right? So is the moving average crossing over a particular range? Now you want to be convinced that indeed that moving average has finally crossed over it, and then you say, okay, I can take this trade, right? So for some people, they wouldn't even wait for that crossover. The moment the market comes in close to that moving average, they want to take that trade. Imagine traders that also trade with candlestick confirmations, right? So what they do is that okay, they are looking out for key candlestick confirmations like a doji, like a tweezer top, like a bullish engulfing, bearish engulfing, all of that stuff, right? Now what happens is that instead of them waiting, especially let's say they're looking at taking those type of trade confirmation on the 30-minute, on the 1 hour, on the 4 hour, whatever time frame that they're looking at, they're supposed to wait for that confirmation, right? So you might as well be watching, let's say, a candle confirmation like a bearish engulfing. You're saying that okay, the market has come to a beautiful resistance level, I'm looking to short this market, and then a particular candle is trading currently, let's say in the 1 hour time frame, right? But it's printing as if it's printing like a bearish engulfing. You have to wait for that 1 hour candle to perfectly close and be like, okay, indeed it has finally closed and it has printed that bearish engulfing candle. You know what happens? Most traders are not going to be like that. They're going to wait and see that candle coming close, like it has like, let's say, 20 minutes to close. It might as well just close as a bearish engulfing. Guess what? Let's just short this market. They start dumping in the lot sizes, and then before they realize, the market that was printing a bearish engulfing becomes a hanging man. Hanging man means that the wick reverses and goes all the way back up, and then they're already facing their stop loss, right? So you really want to be that trader that has a lot of patience, relax, and make sure that your confirmation has met your criteria before you decide to jump in on a trade. Next important thing that most people also overlook, which is very dangerous, is stop loss in pips. As far as you have decided that okay, this trade is coming to a key zone, I want to take it, and then you've also had the patience to wait for your key confirmation, next most important thing you have to wait out for, or next most important thing that you have to look out for, right? I'd rather say you want to look out for is your stop loss in pip. Now what do I mean by stop loss in pips, right? Stop loss in pip is basically measuring the potential entry of your trade to the potential level that you want to be stopped out if that trade goes wrong. Why it is important to do that is that sometimes in the market you could have very sumptuous trade setups that look like, oh, this trade is very good, look at the levels, I'm going to take this trade for a sell, and then you put your sell there, right? Before you realize that, okay guys, you know what, I did not even check my stop loss level. For instance, you're used to putting a stop loss of what, 20 pips, stop loss of 30 pips, 40 pips, or even 15 pips, and guess what, because you did not measure your earlier stop loss in pip for that particular pair and that particular entry level that you're trying to take, you measure a stop loss and it's literally running 90 pips, 100 pips, right? Guess what, you're going to start panicking. You're wondering that, wow, look, I literally put one lot on this and then the stop loss in pips is 90 pips. If I put the stop loss in pips and then this trade goes into a loss, I'm going to literally be losing $900. Guess what, my account balance is only $1,500. You're going to start panicking. You're going to start taking irrational decisions. You're going to be wondering, should I close this trade? Should I hold it? You know, you're all over the place. So Firstly, you must be comfortable with the stop loss in pips, which is like measuring it and knowing that, okay guys, this one is the stop loss in pips. I'm going to put my stop loss here when I execute a trade, right? For me, instance, I have a particular range of stop loss in pips that I like to take in terms of my trade setup. I like anywhere between 20, 30, 40, and then maximum 50 pips, right? Except for some very highly volatile pairs like oil, like US30, like gold and stuff like that. So for them, I know that sometimes they can be all over the place. But if I'm taking a trade on GBP USD, if I'm taking a trade on AUD USD, JPY, and all those stuff, I will make sure that they fall in the category of like that 20 pip, 30, 40 pips, maximum 50 pips. So if I find a trade setup which is like extremely sumptuous, it could be like GBP USD or Euro USD setup, I want to really bank in heavy on this trade, but I measure the stop loss and it's literally running around 100 and 150, 200 pips. It totally throws me off, because guess what? Stop loss got to be where stop loss needs to be, and then if I decide to put the stop loss where it needs to be, it totally goes out of my trading rules and regulations. So guess what? I'm going to let that trade setup slide. So this is a very important precautionary notice that you have to always take care of if you want to take a trade. Next important thing is risk to reward. Risk to reward is less talked about, right? So sometimes people think that risk to reward is all about pulling your trading view and then putting that red and then green, you know, range tools on it, and then that's the end of it, right? Okay, beautiful for them, they understand the risk to reward, right? So let me tell you the truth. Risk to reward basically tells you, the trader, how you're going to profit when the trade goes into your favor and how much you're going to lose according to your capital, right? Now, every trade setup has its own unique risk to reward depending on the structure, right? Some people, they just use a definite risk to reward. They know that, okay, regardless of where the market is ranging, for me, I only take risk to reward of 1:1 trade setup, or 1:2, or 1:3. But I don't think that that is ideal. Sometimes the market structure informs your risk to reward setup, right? So let's say you're taking a trade on a support level. You want to look out for the next resistance level, because that's where potentially the market could travel to when it's going far ahead, right? And then you want to measure your stop loss in pip from that entry range, and then you also want to measure where the next possible level of market range is, which is like that next resistance level, and then you would now consider the proper risk to reward of that setup the way the market is providing it. You don't want to do a fictitious or ambitious, overly ambitious risk to reward. So some traders, they set up a stop loss, they set up their entry range, and then they put their risk to reward. Let's say the stop loss is like, let's say 20 pips, and then they put their take profit from like, let's say 1,000 pips, and they say this trade has a risk reward of 1:10,000, and they're excited. Look at me. Meanwhile, the currency pair they are trading never even travels 10,000 pips in a year, or even 1,000 pips in the whole decade, right? So you want to be very conscious about that and take precautionary notice of the risk reward. Now, the risk reward should convince you that this setup looks legit. This setup is something that I want to take, because guess what? If it goes in my favor, I'm easily going to make 1:2. I'm going to make 1:3, 1:4, 1:5. If it goes against me, I'm going to lose 1% of my account or 2%, depending on your risk appetite. And guess what? If you're repeating the same process over and over, you're going to obviously be on the P&L, positive side of the P&L in your trading account, right? So you don't want to totally overlook risk to reward, and think about it the way I've literally explained it to you. Use your trade confirmation and your trade criteria to determine your risk to reward, than overly ambitious and then throwing it far ahead in the thin air like that. Last one is lot size. Very, very, very important. So many traders, they don't even measure their lot size according to your stop loss in pips. So you know what? The moment a trade setup looks legit, boom, they just take the trade, right? According to what their instincts feel or what their persona feel. Okay, today I feel like put it on 1 lot, boom, they put it. Today I feel like put it on 2 lot, boom. Today I feel like put it on 0.5, boom. They pull their stop loss and they realize that, wow, this is going to make me lose $500 if it goes bad. This trade is going to make me lose $1,000, and they start panicking. You want to make sure that you're checking your lot size for every trade confirmation, right? I used to be that way, right? Back in the days when I'll take a trade on, let's say, a mere $2,000 or $1,000 account, right? I'll be like, this trade looks good. I'm more focused and just energized towards the trade setup than literally checking those pertinent things like the stop loss that I'm throwing on the trade, right? So the moment I get excited, GBP USD is going to drop, then boom, I put 2 lots. Then suddenly I put the stop loss is 50 pips. I'm like, wow, if this trade goes into a loss, I'm literally going to be losing $2,000. You're going to start panicking. You understand me? You don't want to be that type of a trader at all. So have a predefined lot size, right? It's not feasible that every trade condition at all, then you're going to take that position size calculator and put in, okay, my stop loss is 20 pips, my account size is this, so it's going to give me a lot size of 0.4. It's not feasible. It's not ideal. So what I advise my inner circle traders is that have a predefined lot size, in that you know your account balance, you know the usual stop loss of your trade entry, so you know that, okay, on a random worst case scenario, I'm going to be putting 0.5, and then even if my trade entry is around 40 pips stop loss or is around 45 pips stop loss, it balances out, because at the end of the day, it almost always lets you lose the same range of your stop loss in pips or your risk exposure in percentage wise, right? So that is what I'd advise any beginner to do, or any even advanced trader to do, right? So it clearly already noticed that I've given you literally 5 precautionary notices or 5 important criteria that you have to look out for before you take any trade at all, right? So I know very well that you guys really did enjoy this, and then you want to learn more, you're yearning for more, you're wondering, Kojo, like this is literally insane, this is literally like golden, this is like gems that you're giving us, right? If you really want to get a lot more content like this, if you want to really like delve deeply into my brains and then like the type of trading information and deep secret that I put out there, you first want to click in the link in the description to purchase the KOJOFOREX Go strategy. I call it the Go strategy because it's what the greatest of all time strategy. No cap, right? Look at my previous video that I literally just posted. That's like a snippet of what is in the content, and then everybody's like hyped up and excited. Wow, Kojo, you gave us this for free. Imagine what is in the paid. And guess what? The most exciting thing is that I've literally slashed the price, right? Remember, it came out in the previous years when I started really putting out this content out there, was selling for $1,000. A lot of people purchased at that high price. Then it went down to what, $300. Now I've slashed it from $300 to $150 because I want a lot of people to literally afford it and then be able to come into the inner circle, and then I'm going to mentor you, right? The good thing about this course is that the moment you purchase it, you get access to our mentorship group where I teach you and then you have a conversation with me. Plus, I'm going to be dropping my trade analysis anytime I put out a trade, and also I'm going to be holding Sunday weekly live analysis where people have access to ask me or their setup they took, their question, their confusions and everything. So it's a very interesting journey. Click in the link in the description to purchase at only $150 for life, right? As a lifetime access. Nobody's going to ask you for a resubscription and stuff like that, right? Also smash the like button if you have not done that already, right? So I'm going to be waiting for 1 second. Smash that like button now, and then before you do that, also subscribe to this channel if you haven't done already. This is an amazing channel that's going to elevate your trading level, or it's going to elevate your trading journey, right? Connect with me on all social media, especially Twitter and Instagram at KOJOFOREX, right? KOJOFOREX is only KOJOFOREX. There's no one, there's no dot, there's no beware of scammers. There are a lot of people that clone my account. So connect with me at KOJOFOREX. Lastly, click in the link in the description to join the KOJOFOREX Telegram community, the most incredible and huge and biggest trading community, the whole of Africa, right? So it has 70,000 plus members, incredibly solid members behind the KOJOFOREX community. So click there. For them, what I do for them is that I almost always give them free signals. So if you want to enjoy the ingenuity, the blessings, the free will of KOJOFOREX, click in the link to join that community, and then I'm going to be giving you trade signals that is going to help you come out of your losing trades, come out of your drawdowns. It's also going to help you pass your funded challenges, and then you're going to be extremely excited without paying a dime. I hope you guys enjoyed these lessons. I'm going to see you in the next one. Peace.